This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Start of the second week of 2024. It's still expected to be a little quiet like how it was for the last 2 weeks or so. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, Prashant. Good morning, Nigel. Morning. And, we didn't get a chance to wish you a happy New Year. You're back after the break and so are we. And I think it's been really volatile, a little tricky as well. We're heading into earnings season. Global cues are not that great. So maybe a little bit of caution is perhaps the need of the hour.
Well, we're waiting back for the institutions to come back to full strength. We are at least back to full strength. So let's see how this goes.
Absolutely. I mean, global markets were a little weak. Although it's just, US, for example, just had 4 days out of 250 working days. So it's too early to say anything in terms of, which way things go. But the point, beg your pardon, but the point is that the S&P was down about 1.5% over the last 4 sessions. That is, the last 1 week or so. But it's just maybe pullback of the last 15 days when US, especially the Nasdaq, S&P, etc., had a bit of a Santa rally. So that got pulled back. It's normal for markets to go through periods of digestion. Now, the other indicator, the other factor, I think, which is very, very clear is that investors are very aggressively pushing back on imminent rate cut expectations. If you remember, 2 months back, actually, say 3 months back, the expectation was that we will get 1, if not 2 rate hikes in 2024. That flipped very quickly to the market expecting the first rate cut in March. So that is now being pushed back. You had the jobs data on Friday, which suggests that the first rate cut will be later than March. Not in March. Perhaps in May, perhaps, 2 months or 3 months down the line, but not in March. That's what the data suggests. You could look at the, Fed minutes, etc., which came out last week as well. They were a little hawkish than the meeting itself indicated. Now, just one more comment I want to put out. This came in on the weekend, and I think this is important to note. This is the Dallas Fed president, the U.S. Federal Reserve, essentially saying that recent easing in financial conditions means, and I quote, "we shouldn't take the possibility of another rate increase off the table just here." Now, this is different from what we've heard over the last many weeks now. Markets are very focused and fixated on the fact that, we are at the cusp of a pivot. 500 basis points of rate hikes, and now a rate cutting cycle will start. So rate hike is nowhere in anyone's forecast, but this is, this comment was made on Saturday by the Dallas Fed president. Let's just circle back to the levels here. Now, the Nifty was flattish last week. We were down about 20 points or so, Friday to Friday. And we closed around the 61.8% retracement of the recent fall, the recent, small fall that we had. What is that level? That level is 21,705. And as long as we left off at 21,710, as long as the Nifty, we basically need to sustain above this level, the 21,705 level. And if we do that, and we're able to build on it, you basically can target the 21,834 level, which is the recent high, and 21,970 then on the upside. But we need to first sustain this 21,705 level. On the downside, the support comes in at the 20-day moving average, which is at about 21,400, 398. That's the support. And a decisive break of that, that's still some distance away from where we left off on Friday, will indicate perhaps the beginning of a bit of a downturn. Remember, we put this piece out towards the fag end of December. January seasonally is a weak month. We've not had, a January where December was so strong as the December we had in 2023, and January turned out to be a super month once again. But we'll see that seasonality at play. The Nifty Bank Nifty, that posted a negative weekly close. Support for the Nifty Bank, again at the 20-day moving average, which stands at 47,801. We left off at 48,160. On the upside, the recent high is 48,636, which the Nifty Bank, hopefully we'll see before we see a downturn. We get into earnings season this week, and I think that perhaps more than anything else, at least will determine the very near term. Remember, IT will kick it off, and IT, I don't think there's anything dramatically different expected in the quarter, in the October to December quarter, when these companies start to report, commentary, etc., will still perhaps should be as cautious as it has been over the last couple of quarters or so. Add to that the fact that the global picture has been a little weakish over the last 4 days, and maybe, the setup this morning is of a mild, muted kind of start. So about 30 points lower is what we have. Watch those levels as we begin another fresh new week. Sonia.
Oh, absolutely. And, the strong US jobs data that came through, right? I mean, that perhaps is giving rise to some worries that maybe the rate cuts may get delayed because of how strong the situation has been. And that's giving a little bit of caution in the global markets. Hong Kong, by the way, I just want to pull up the Hong Kong market. It ain't looking good this morning. So just pull it up. I think it's a 1% fall that I've seen as of now. The implied, there you have it, 1.5%. So Asia is not looking good. And for our own markets as well, the start will be in the red. Now, earnings season begins this week, so all eyes are going to be on that. Don't have any high expectations from the likes of Infosys and TCS. They come out with their numbers on Thursday. There's Wipro, HCL Tech on Friday. There's DMart on Saturday. So lots happening this week. The numbers on an average, brokerages are expecting a fall of around 2% quarter on quarter in the revenues, dollar revenues for a company like Infosys. TCS is expected to be flat. But is there any positive surprise coming in terms of the commentary? That's perhaps something the street is looking at, because both of these stocks, Infi and TCS, have been up about 5.5% in the month gone by. So is there a positive surprise coming? That's the big question. Bajaj Auto is also in focus later today because they will be announcing details of their buyback. There's a meeting at 4:30 p.m. in the evening. The size, price, everything will be announced. Remember, it was a big mover last week. Tata Steel in focus, and Nigel will tell us more about that. But best ever quarter in terms of crude steel production, etc. So keep an eye out on a couple of these names. Titan, Nykaa also coming out with business updates. But the Nifty has been holding on to 21,700, and we've seen a second day of large FII buying on Friday. So FI has bought about 1,700 crores in the cash markets, while DI sold about 3,500 crores. So let's see which way it goes. Things could get volatile as we get a lot of data points. And this morning, the early start could be in the red, and then we'll take it from there.
Well, I think the Nifty is in that range, right? The 350, 400 point range. But I think you want stability coming from the global markets. And what's worrying out there is the tech-related stocks. The big tech stocks, valuation-wise, they're not in support. That's point number one. The second factor is the global equity market participants itself, they're a little uncertain with regard to what the Fed will do next because of the economic data that's been stronger than expected and the commentary that's come out as well. So the quantum as well as the timing of those rate cuts is something that the street is a little bit skittish on. And the third factor is this Red Sea conflict. We're brushing it aside, but maybe it could impact trade maybe for a little longer than expected. You want a resolution out there. So those are the three broad factors that are making the global equities a little nervous. What do the FIs do, though, in Friday's trading session? They covered some mild shorts. They added some long positions. They continue to remain net long, with close to around 67% of their positioning on the long side. I was looking at the options data, and that's giving me that confidence that maybe we're in this 400-point range. 21,700 call, fair bit of action out there. 21,500 put, fair bit of action out there as well. So just punching in those numbers, the range that you come to is closer on 21,450 on the downside, and on the upside, 21,850 odd. Remember, Realty and Pharma, both of them have started off 2024 in style. So there'll be themes that will play out. So look for those themes. Maybe on the headline index, you'll see a bit of a consolidation. But individual sectors and stocks can do a thing of their own. Like we saw the mid and the small cap indices, yet again, they outperformed in a week that the Nifty ended more or less flattish. So what do you track from here on? The Q3 earnings, well, they kickstart second half of this week. We'll get the tech-related names. So they'll come out with the set of numbers. There'll be a few mid-caps as well. They'll be coming out with their numbers. And remember, mid-caps have run along a good deal. So you'll want to see that stock price movement match up with what they're seeing. The earnings should match up with the stock price movement. That's something that we'll be tracking as well. And US economic data continues to remain in focus. The commentary coming in from the Fed as well, that's going to be important. For starters, the GIFT 50 suggesting we pull back a little bit. I think there was a mild downtick, 20-30 point downtick. I think we're still in that range, So if you want to buy, you buy at the closest end of the range, you sell at the higher end of the range. But otherwise, you stick to sectors, stick to stocks, and look to build a good portfolio.
Absolutely. And I think through the end of the week, you'll get more details on IT earnings, and then maybe you can take a call on that sector as well. But lots coming up. First up, we have a view from Ridham Desai of Morgan Stanley, who says some of their technical indicators are approaching the sell zone, but not all, even as fundamentals are at just about mid-cycle levels with more upsides in the coming quarters. He expects a further rise in volatility. He says they are overweight financials, technology, consumer discretionary and industrials, and are underweight other sectors. That said, he adds the macro trade could peak in the coming weeks.
Okay, let's get you some money market views as well. B. Prasanna of ICICI Bank says stronger than expected labor data in the US at the start of the year helped the dollar recover from lows. However, he adds, poor ISM services number hurt the recovery and broad trend of dollar weakness remained intact. He says the rupee was range-bound as the RBI continued accumulating the dollar. He also goes on to add, seasonal flows and a subdued dollar will help the rupee catch up in coming days, and he expects the USD-INR pair to trade in a range between 82.85 to 83.35 with an appreciation bias.
All right, and on the bonds, B. Prasanna says global bond yields retreated from the recent lows owing to strong labor data and heavy supply calendar in the new year. He says local bonds saw a similar impact as higher than expected SDL calendar and continued pressure on deposits resulted in bond yields moving higher. He says the markets will be watching out for inflation prints, both domestic and global, before taking a firm view. He also expects the markets to consolidate for the time being, with the 10-year benchmark bond yield likely to trade in a range of 7.15 to 7.25%.
Well, we've got a lot of stock-specific action to track for you. We'll get to that in just a bit, but for the time being, we run you through our top 10 list. We're looking at Tata Steel, Godrej Consumer, Nykaa, Union Bank, Spark. All of them will be reacting to positive news flow, while we'll have 5 of them that will be reacting to negative news flow, namely Titan, Federal Bank, Marico, Adani Wilbur, as well as Bank of Baroda.
All right, well, those are stocks which our research team will get to you in just a bit from now. But